Yeah, so Pure had a good quarter. I'm pulling up a few notes here. Give me a second. I had the wrong one up, buddy. 1 second here. All right, here we go. 12% growth, 3.2 billion for the full year. 879 million, double-digit growth year on year. One of the things I really liked about this quarter's results was the subscription growth. It grew well. It could have grown more, of course, but they basically hit the numbers and guided in line a little bit below. But I felt like it was a conservative. Talked to Charlie Giancarlo, CEO. Look, the company's been very focused on that pivot to subscription. It's been very focused on having a story for AI. It's been very focused on kind of diversifying into cyber resilience. And I think they're doing all the things, Pat. And so, always been very centric to his business, has been about great customer support, success. It's got a story evolving for moving to cloud. But at the same time, they got a story evolving for cloud moving to prem. So I really like kind of the way it's set up. It's diversified. We know that in some ways, storage is sometimes seen as a commodity. So one of the big challenges for them has to be continuously innovative, to continuously show that, the way storage plays a role like I said, in data and AI, which has been very focused on. And of course, at size and scale, it's also been, focused on trying to bring value to its shareholders. And it did that as well this quarter. It even announced a $250 million stock repurchase program. So, in my conversation with Charlie, he really beat the drum on the company's transformation, though. It's that I don't think they want to be just storage. And I think one of the big takeaways for the investors out there is, they really do continue to deliver. They've got really happy customers, and they are evolving, and that gives them more SAM and TAM to address. And so it was a good quarter. I think if they execute, it has the opportunity for some great quarters ahead.
Yeah, I want to thank Charlie for the conversation as well. A couple things, I'll fill in the gaps. The guide wasn't viewed as exceptionally good.
Yeah, it was like a little below, right?
Yeah, it was 11%, which was below expectation. And it's very clear, I like, when there's a definitive answer there, which I think there is, I think it will bode a lot better in the long term, right? It's not like we had some execution issues, right? This is all about the E-family growth. And don't forget, E-family is designed to replace spinning disks. And you had NAND pricing that rose, you had disk costs that stayed the same, and you're selling a lot, higher percentage of the mix. This is exactly what you are going to get. And also, went and I read the transcript, looked at the Q&A, and Charlie was very definitive that this is a temporary situation. So we'll have to come back and see how temporary it actually was. One thing I really appreciated was the discussion of fusion, okay? Enterprises have a hard time pulling together data from disparate places in the enterprise, and fusion pulls that all together. And I'm glad that Charlie kind of went through and explained a lot of that. Some more questions came out. Slower than expected growth in subs compared to prior quarters. I think we could be getting into the law of large numbers here. It used to be that when the company was, this is kind of one of these problems that AWS runs into, where they're growing so big, and you get into just these massively large numbers. It is a challenge to hit the percentage growth that people are expecting.